Just okay. So today we're going to be talking about reviewing the closing disclosure. And so the reason that I wanted to do this was because I know that sometimes we get it and then the clients have questions like, what does this mean? What does this mean? And some people struggle to explain that. So I'm going to go through it line by line and kind of explain to you what it is and how to explain it to your clients in case they have a question. So let's go ahead and okay. So this is just a sample closing disclosure, and this is just a random one that I found online a long time ago. So I'm going to use this instead of an actual client's closing disclosure because it does have personal information on it. So first things first is you should be getting a closing disclosure from the lender or the attorney within 3 days of closing. Now, I will say that they're really bad about sticking to that time frame. And lately we've been seeing it like more of 1 to 2 days before closing instead of 3 days. But as soon as, and I would let your clients know this too, that as soon as they get it, send it over to you. So that way there you can review it and make sure that everything's there. Because if you don't review it until the closing table or you don't review it until after closing, there could be something wrong with it and you're not really going to be able to go back and change that. So let's just jump right in here. So you'll see a lot of this stuff is just going to be lender specific. So it'll depend on the type of loan that your client has and all of that stuff. But for the most part, this is going to be very similar. So you'll have the date issued, the closing date, and the disbursement date. So this could be different depending on, so the date issued again should be a couple days before closing, the closing date, and then if closing or if the settlement is happening like later in the day, the disbursement date may not be until the next day. So keep an eye on that. It'll say who the settlement agent is, which is going to be the attorney, file number, property address, sale price. Pretty much all of this is pretty straightforward, right? So in here, it'll say if there is a fixed price or if it's like a 5/1 ARM or, whatever kind of loan that they're getting, it'll say that right here. So you'll just want to make sure that that's correct. If they're doing conventional or FHA or VA, whatever it is, you want to just make sure that that is showing correctly. So the most part or the biggest part that you want to actually pay attention to is going to be starting here under loan terms. So what you're going to do is you're going to make sure that the loan amount is correct. And then all of this, again, most of it is for the lender, but you still want to make sure that it's correct. The interest rate is going to be here. Again, this is from a long time ago. So this is probably going to be doubled right now. Unfortunately, all of that is going to be doubled right now. But anyway, just for sample purposes, making sure that that's correct. If there's a prepayment penalty, your client will need to know that. So it'll say yes or no if there's a prepayment penalty. And just so you know, you don't have to memorize everything that's on here. The attorney is going to go through it line by line with the client as well. Or most of the time what they do is they send it out and then they say, did you have a chance to review it? Do we have any questions about it? And then they'll still go line by line on this page, but not necessarily the rest of the pages. So anyway, prepayment penalty, if there's a balloon payment, anything like that, that's going to be there. Projected amount that they're going to pay. So years for this particular one, it was years 1 through 7. This is what they're going to pay years 8 through 10. This is what they're going to pay because they had that PMI on there, because if you don't put down at least 20%, then you'll have PMI on it. So sometimes you can pay off that PMI ahead of time. Sometimes it's just rolled into your mortgage, or sometimes they don't have to pay it at all if they have a large enough down payment. So that'll all depend on what the total amount is going to be. Obviously, your escrow is going to hold, and we'll talk about this in a minute. So your escrow is going to hold your property taxes and your insurance as well. So that's where that escrow amount comes in. So, right here. So the escrow amount is this. and then it tells you what it includes. So if it does include property taxes, if it does not include property taxes, please pay attention to that, because then the client is going to have to pay their own property taxes at the end of the year when they get their property tax bill. Now, they will still get a bill most likely, but they just need to confirm with their mortgage holder if they're going to pay the taxes on their behalf, which they should, because it should be an escrow, but just always have them confirm that as well. And then again, your homeowner's insurance is always a requirement, especially if you have a loan product. It is always a requirement with a loan. So that is going to be part of your escrow. And I don't know if you guys know this, but when the lender does all their paperwork, they'll offer homeowners insurance, but they can shop elsewhere. They don't have to use the lender's homeowners insurance. They can shop for other places to see if they get a better price, and it doesn't affect their mortgage at all. I mean, it affects the price, but it doesn't affect the validity of the mortgage. So HOA dues are typically not included in your escrow. So just keep them, let them know that's a separate charge that they're going to have to pay outside of their regular mortgage. So this just breaks that down for them to let them know what's in escrow, what's not. Always, always, always save the CD. And then especially at the end of the year, I always send the CD to the people who have closed that year so they can use it in case they need it for tax purposes, and just so they have it. So at the bottom, you're going to see the total closing cost, which is going to break down here in a minute. And then the cash to close amount, which does include down payments and stuff like that. So when we go over here, you're going to see it's going to break down that loan cost. So the first part is going to be your loan fees. So you're going to have your points if you have any of that. If they're paying for any points, it's going to be here. Application fee, there's almost always an application fee, almost always an underwriting fee. They may have it worded a little bit differently, but there's always going to be some sort of loan cost that comes into it. Now, I will say on some closing disclosures, it will say, I don't know if it says broker or something, it'll say a commission amount for the loan originator. Now, a lot of times what'll happen is that it's credited in another part of the closing disclosure, it's credited back, because some lenders have the borrower pay their commission, and some of them have it credited, but they have to put it in there to show that it's balancing out. So just pay attention to that. And whenever you're working with a client that is getting a loan, they should always have a loan estimate shortly after they apply for a loan. So go ahead and at that time, go ahead and have them send you that loan estimate. So that way you can take a look at it and you can see if it is actually going to charge the commission amount, and they're allowed to shop around. So if they get that loan estimate and they don't like that price, they're allowed to shop around to get the best price possible. But just know that there is almost always going to be an application fee and an underwriting fee or some other loan fee. Okay, so then you have your appraisal fee. A lot of times this is paid at closing, this is paid before closing. Sometimes they'll let you pay it at closing. In this situation, it says paid by others. So somebody else paid that that appraisal fee, but typically it's the buyer that pays it. And so you'll see it either if they're allowing it to be paid at closing, it'll be here. If they have paid it before closing, it'll be here. This credit report fee on this one, you see was paid before closing. And then you have all these other fees. So this says services that the borrower did not shop for. So these are the services that the lender shopped for on behalf of the buyer. And so it's not always going to be a flood monitoring fee or a flood determination fee. These are just whatever items that they shopped for on behalf of the buyer. So it'll total all that up there. And then the ones that they did shop for, so pest inspection, that's going to be the same thing as your home inspection or your termite inspection that we have. And we all know that typically that one is paid before closing. We hardly ever see any inspectors that allow you to pay at closing. So that one's almost always going to be before closing. Survey fee, that could go either way. It'll either show up as at closing or before closing. And all of this title stuff is all of the stuff that the attorney is doing. So it the way that they do it is they have a specific fee, and then they break it down on the closing disclosure what they use each fee for. So like you'll see here, a title search documentation fee is what you'll typically see on it as well, and stuff like that. So all of the attorney fees are going to be there. And so all of that between the loan fees, the appraisal fee, credit report fee, and then all the attorney fees, all of that is going to end up being their closing cost. So that's going to total here. And then if the seller paid for any of that, it's going to show up on the seller side. But typically all of those are just borrower paid, and the seller will have a separate one for their attorney fees as well. So other costs that you're going to see over here. So you always have a recording fee, and then you'll have like an excise tax fee, which is this transfer tax here. And then you'll have, if there's like an HOA, if there's like an HOA fee that's included, that's down here under capital contribution, or if there's a transfer of document fee. Now, do be aware that if the attorney has to pull CC&Rs and the HOA requires the attorney to charge that, it will be charged to the seller most likely. Now, they can come back and they can say, oh, we want the buyer to cover that cost, and that's going to be, it's going to be negotiable, but typically the seller is going to pay that. So you'll see here, you have your recording fees, that's going to be borrower paid. And then you have your excise tax, that's going to be seller paid. And then you have HOA insurance premium. So what escrow does is a lot of times it takes a whole year's worth of homeowner insurance at the time of closing. And then it takes your prepaid interest and your property taxes that are prorated throughout from the time of beginning of the year to the time of closing. And then you guys know that when we do that, we divide whatever that property tax is, you divide it by 365 days, and then you times it by, or I think 365. It might be 360. Anyway, they do the math. You don't have to worry about the math. They do all of that, and then they put it in there. And then the seller will have a seller debit, which we all learn: seller debit, seller credit, buyer debit, buyer credit. That's the same thing as here. So the seller debit will be that prepaid property taxes up until the time of closing. So the longer in the year that the closing happens, the more the seller will have to pay towards those taxes if they have not been paid yet already. If they have been paid and it's like later in the year and they have been paid already, then the buyer is going to credit the seller on that. But anytime pretty much between the first of the year and the end of October-ish, because a lot of property tax bills come out October 1st, if not before, or that's when they're due. So that's when they'll start being paid. So anytime before that, you're going to mostly see a buyer credit and a seller debit for those prorated property taxes. If the seller has already paid HOA dues, so say the HOA has been paid quarterly and they've already paid for that quarter, you're going to see a seller credit and a buyer debit just to equal out those HOA dues. And again, those are prorated as well. And then so we have your prepaid insurance premiums, your mortgage insurance premium, if that's going to be included, your prepaid interest and prepaid property taxes. And then you're going to see your initial escrow payment at closing. They go ahead and pay that for a couple of months because your actual payment isn't due for a couple of months. So they want to go ahead and get those property taxes and those insurance payments done at closing. And then you have your other fees. So these are going to be some buyer, some seller fees. So you'll see here, like the home inspection fee, again, we don't really see that paid at closing anymore. So that probably will be a before closing. So that won't count towards their cash to close. Again, if they have the processing fee or capital contribution, not all HOAs have that. So they'll get some notice from the attorney if they do have that. But then you see here, so real estate commission, right now, seller paid by seller. So you'll see that breakdown here. Now, I don't know if you guys saw my live on Facebook agents page the other day, but we are starting to see sellers either not paying very much or not paying any at all for buyer paid or for buyer agent closing commissions. So really pay attention to that, because if it is something where your buyer is going to have to pay that amount, that's going to
I
add to
know.
the cost. So pay
I
attention
know.
to that. And so this is where you're really going to need to, honestly, for us as agents, this is the most important part for our end, because we want to make sure we're getting paid correctly. And sometimes it's going to be a sticker.
Well, this sprinkler isn't really working. Oops, sorry.
Sometimes it's going to be a sticker shock, and sometimes you're going to, sorry, hold on. Sometimes you're going to see on there that the seller, the listing agent, is making way more than you as the buyer's agent. And it is what it is. You know, they create that listing agreement. They come up with that agreement. We don't know what the listing agent's commission is until the end of the transaction, until we see the CD. But you want to make sure that your portion is correct, whether that's the buyer paying it or the seller paying it. Hopefully it's still the seller paying it for a little while. But we'll see how that turns out. But just making sure that that amount is correct. And then if there is, so all of that totaled will be here, and then this plus this plus this. So you'll have this section plus this section will equal all of your total closing cost. So then when we scroll down to this side, it's going to show you what the estimate was. So again, when they get that loan estimate, it'll say the expected amount for whatever their total closing cost will be. And this one is a little bit different. Typically, we see it less than whatever that closing cost is. So that's always a nice surprise for the clients. I'm not really sure why I don't know, whatever happened here to make it more. Oh no, it's right, because you have less than cash to close. So you have your total closing cost, any costs that were paid prior to closing. So your loan estimate typically doesn't show anything that's paid. It includes it in there, like the appraisal fee, credit report fee, all that stuff. But if you paid for that ahead of time, that's obviously less that you have to pay at closing. And then any down payments that are made. So down payments are going to be your financial down payments. That's not the same as your deposits. So deposit is where you'll see the credit for due diligence fee and earnest money. So that's going to be taken out of the original cash to close. And then if there's any credits, so if the seller's offering any credits at closing, anything that's adjusted there will be obviously make it less for cash to close. And then if there's any other adjustments, sometimes the lenders have adjustments to their prices and stuff like that. So this is going to end up being your cash to close amount. Now your cash to close is going to, I would always recommend that to be paid within 24 hours of closing, and go ahead and wire that to the attorney the day before. And that way there's no, especially if you have an early morning closing, there's no delay in that. So they can't actually try to record the deed until after they've received that financing from the lender. If it's a cash transaction, it's a little bit different. They pretty much just bring whatever the cash to close amount is, and then they process it pretty immediately. But this is all in regards to having a loan. So then it breaks it down a little bit more under the summary. And then here you can see a little bit easier of seller and buyer side by side. So you have the sale price of the property, any closing costs that are to be paid, any adjustments, taxes, assessment, HOA due, anything like that, that's going to be here. And then again, anything that's already been paid prior to is going to be here. So that's your deposits, and any credits that they're going to get. That's all going to be right here on the buyer credit side. And then it's going to be buyer debit side. So when it says due from seller, that's a seller debit. When it says due from buyer up here, that's going to be a buyer debit. And then you have your seller credit here and your buyer credit here. And then, so it has it broken down. So here's your total amount due, what's already been paid, and that includes the loan amount here. So that's why that part isn't on the cash to close, because that's part of the loan amount of how much they're getting. So that's what it says here, loan amount. It's going to be under your debit. And then your cash to close from the buyer would be this amount. And then your cash due to the seller would be this amount after that payoff, after that commission fee, after those attorney fees, any prorated fees, all of that stuff. Now, If they're getting a loan, they're going to have this part as well. So it's again going to go over what's part of that escrow, what's going to be paid, what's the estimated payment amount. If they are going to allow an assumption of loan, we're starting to see some loan assumptions, which is kind of weird, but it is what it is. Just be aware, I don't want to dive too deep into loan assumptions, but if you do see a loan assumption, make sure to reach out to myself or Terry, because there's a little bit that goes into it than just taking over the loan. They still got to put a certain amount down. They still got to do all this stuff. So there's a little bit of, it's a little tricky. So reach out to us if you run into that issue. If there's a late payment, it says what that is. So basically this is just letting the borrower know, like, hey, here's all the requirements for the loan. And that is the end of the closing disclosure. So it's really not terrible, but it is something that you need to know a couple of things about. Now, if I have any questions about a closing disclosure, I reach out to the attorney or I reach out to the lender and I say, hey, can you explain this a little bit more? Can you let me know what this was for? I've only had to do that once a few years ago, but it's pretty straightforward. Like, this is why they break it down over here, because on the summary part, they just have the total amounts mostly. So on here, it breaks it down to say, okay, well, those attorney fees covered all of these things for the title search. And then there's, I don't know if it's, so there's going to always, oh yeah, recording fee. So they have recording fee under other costs instead of under the title side here, but sometimes it's one or the other. Any questions about the closing disclosure?
Michelle, this is Paul. I just had a quick question. Is there, like, I don't know if you have like a sheet that just gives like a range of like what is a recording fee range or what is the carrier fee range? And I know, insurance could be based on, or property taxes are based on the property itself, but
Yep.
the attorney fees, just so that when we look at it, say, okay, this feels right, or no, something's not right here.
Yeah. So I probably need to update it, but we do have an estimated closing cost sheet. And basically that breaks it down to say, typically an appraisal runs from this price to this price, or typically an inspection runs from this price to this price. Typically an attorney's closing costs are going to be from this price to this price. Now, I don't have it broken down to exact amount for recording fees and stuff like that. But a lot of attorneys, you can, especially if they're shopping around for attorneys, which I would recommend doing prior to even looking at houses, because once they're ready to put in an offer, it's like, oh, I don't know what attorney, just whatever attorney you recommend. But if you're shopping ahead of time, then you're able to ask them, hey, can you give me a breakdown of your fees? And they'll tell you exactly how much each fee is. Typically the recording fee kind of depends on the county. They just charge their own fees. And then some counties don't let you do e-filing. They have to mail it away, which takes a little bit longer. And then they have to pay for postage for that. So that's going to add to the fees for that. But they can give you a breakdown of what their attorney fees are, like their title search fee, their document preparation fee and stuff like that. They can give you a breakdown for that. And then so you're able to compare that to each other and be able to give that to the client to say, it should average about, like I like to say, it's between 900 and 1,500 on the buy side at the maximum. I've never really seen it more than 1,500 on the buy side. But yeah, you can reach out to different attorneys and get a breakdown of their fees. So
Thank you.
You're welcome. And then again, those HOA fees are going to be different. Also, if you're working with a buyer and they have a very strict budget, they need to be aware that those HOA fees need to fit into that budget. So although it's not going to count on their actual mortgage amount, it does depend on how much they get approved for, because they're going to count it as a monthly fee whenever they're doing their calculations. So if the taxes and insurance and all that stuff come out to still be under their budget, but the HOA fee is $300 a month, and that brings them over their budget for whatever lending will allow, they're going to need to find something different, or they're going to need to pay, they're going to have something that's less than that price, because it does count towards their monthly payments. So keep that in mind, especially for like townhouses and condos. Those fees are typically outrageous. So just keep that in mind. Any other questions? No? Awesome. Kept it under 30 minutes. Proud of me. So I'm gonna cancel this, stop share. So I will